Hi and welcome to the Market Alert for Friday, the 3rd of July 2020. So yesterday's headline is stocks saw to best week in 3 months as COVID comeback concerns mount. But it doesn't matter, greed is good. The old mantra from Wall Street back in the 1980s with Michael Douglas, as you can see there, the character that he played. And yesterday, well, a very interesting day actually. I mean, let's start off with the daily chart of the German DAX, because in yesterday morning's Market Alert I spoke about the market trading back up to the highs that we see here, 12,617 there, and also you've got the 78% retracement as well from this high to this low, and the market sideways. And as I said, it is likely to break to the upside because that's the way they want the markets to go at the moment, certainly until Trump is either re-elected or he's not. But that's how this game is going to be played over the summer. So we saw prices yesterday move strongly to the upside. We go down to the 2-minute chart, and there's some very interesting information here in this chart. We started off with some selling, which you can see, but the market didn't move too low. You can then see this spike in volume here as prices come off the low. You can see this here, and then it's the green bars that are the key here. That you can see the buying into the market already to take out the previous day's high. In order to move higher and build that picture that we see in the daily chart, you've got to get through the previous day's high. And that's exactly what we see there. So we ended up with the buy signal here. Now, this is, as I said in yesterday's alert, they want to move the market to the highs. But what was interesting here is how the market played in this sideways move here. And we're left with three options. We either take the money because we've got the potential weakness here at the R1. We move the stop to break even, which we can see came back to the break even level. However, what we do have here, which again is instead of having hard and fast rules, is to observe what you've actually got. And here we've got the high from the previous day, which is going to become a support level. Plus we have the psychological level here as well, where prices are likely to sit on this. And we have the 20-bar moving average. So we've got prices coming back and sitting at these levels. And the third option, of course, is to keep the stop in its original place, which is very, very difficult to do. I will grant you that, because when you see a profit, you don't want to see it turn into a loss. You'd rather be out of the trade. And that's absolutely fine. There's nothing wrong with taking a profit, as JP Morgan said. Never apologize for taking a profit. So the market traded sideways before it was able then to actually break out to the upside, taking out the R1 and then move higher. So the question is there a way that we can actually take advantage of this? So we have two bites of the cherry. The answer is yes. So for example, in this we take the first option where we see the market trading to this resistance level. We take the money off the table. But then as the trade starts to unfold, we can see the price bars remain green. So the market is still on the long side. And as prices come back, you will see them closing back above the 5-bar moving average. They do close back a couple of times here, but they're still not breaking the 20-bar moving average. So as the market makes these lower highs, and you can see here's a lower high here, the high of this bar is lower than the previous bar. And here where prices spiked up to the R1 again and then came back, this bar also has a lower high. So this allows you to actually do this. And again, I would move the stop certainly below the high of the previous day to give it a bit more of a cushion, or just down below the BRN, the psychological level, because it's likely the market can come down and retest this, so I'd move it down. But at the end of the day, I would still only risk the 1% on the trade. And I've also got profits from the trade to actually risk on the basis the market's going to move higher. Now, I wouldn't do this with every trade. The reason I'm talking about this is because of this the daily chart where I spoke about the market being in a sideways range. and indicating that it was likely to move to the upside. And again, because of the background of the last 12 years of wanting the stock markets back on the highs. So here the market breaks out. You may want to wait until it actually breaks out before you consider it. But again, the price bars remain green. And from this point onwards, you can see how they stayed above the 5-bar moving average until they closed here. And when they closed below the 5-bar moving average, they came back to the 20-bar. And again, once you close back above the 5-bar moving average, you see prices moving higher once more. So there are a few more techniques that you can actually use in order to take advantage of these bigger swings in the market. Same on the downside. You can see here where the markets move lower, traded sideways, come back, it's turned to green, but as soon as it turns back to red again and closes below the 20-bar and the 5-bar moving average, you see prices moving lower. And then let's move forward to the big spike of the lunchtime. This is the non-farm payroll figures that were released, and you can't make this stuff up because record US jobs surge 4.8 million despite virus resurgence. You can't make this crap up anymore. It is definitely the twilight zone. It's the only way to describe it. However, a bit later on, jobs data officially broken, more people getting unemployment benefit than there are unemployed workers. So why the two stories? Well, one's the news release, the other one is the amended figures. But that doesn't matter. What we're after is something to drive the market to the upside, to keep prices moving higher. And this is exactly what happened again in the open of the DAX. You see the strong buying coming in here, and then prices moving higher. Now watch here, prices close back below the 5-bar moving average and the BRN, and then look, you get prices closing back above the 5-bar moving average, and they continue higher. Where do they trade to? Well, let's go back to the daily chart. This range here, we have a look, it is let me just get the correct figure for you. It is 12,650. Go back to the daily chart, and you will see that the high here is at 12,617. We managed to get another through the 50 level, the psychological level, and then prices are hit by the selling that took place on the 23rd of June. I think if I remember correctly, it is indeed. So let's go back and notice this cluster here. You've got 3 red bars at the high, and we know that we're at the 23rd of June high, and then we get the sell signal. Prices move lower. They trade down to the BRN, the psychological level, which is where they found buying before. You can see where that buying came in and moved prices 50 points higher. And then this bar here is what's known as short covering. It's those that were short who are getting out as prices start to come back. However, there's no new buying because we have low volume. Prices trade up to the 20-bar moving average, and these bars here you can see again close below the 5-bar moving average, sending prices lower. There is a bit of buying support here at the R2 level. This is the price target level, and then we see prices trading sideways. We get our classic retracement before prices move higher in the aftermarket. But if we have a look later on, we can see prices move sharply lower, and this is confirmed by the Dow. You can see there, once the real figures we're in on the unemployment numbers, the reality check kicked in and the market fell out of bed. The DAX took a bit more to move with. It was incredible because the Dow had actually moved 250 points and the DAX only moved 50. But later on, again, you can see the Dow moving lower there once more. Now today the US markets are closed, and you can see that the market's currently in a range of 100 points here. What's going to happen today? Who knows? Because normally we have a situation where they would try and move the market to the upside. So if we go back to the daily charts at the moment, you can see in the Dow that we've got prices starting to move higher there at the moment. The 200 bar moving average is in the way, as is the 20 bar moving average. So the Dow is actually fairly weak compared to the German DAX. We go back to the DAX, we go back to the daily, and you can see a different picture here. Let me just reset the chart. No, we don't need to see so close. And you can see here that it's a different picture. We're above the 200 bar moving average, and but stuck at this 12,617 level, which needs to be taken out if prices are to move higher. The question is, do prices actually trade sideways? As we can see that they're still sideways here. We've got two sideways situations going on actually. We've got this sort of higher one, and then inside of this one, which you can see there as well. So it'll be interesting to see what happens, but it certainly looks weak. There is no news today to move the markets. It's the bank holidays, the US, it's Independence Day celebrations. So we're going to have to take a cue from it. We'll be able to see this from the open. Which direction, I have no idea on this one. What I do know is that we've got resistance in the daily chart, which will need to be taken out if prices are to move higher. Generally, they've used quiet days to move the market to the upside, but given yesterday's strong move to the upside, we could see the market moving back down as well. But we'll know from the open, we'll get a pretty good idea. It could be desperately quiet as well, because of having achieved the objective yesterday of putting the markets on the high. They want an indigestion-free weekend and celebrations without having to worry if the stock market's going to crash or not. And it will just trade sideways and quietly, so be prepared for that as well, where there could be losing trades. But the open will determine this, and if you look at the overnight, even in the 2-minute chart, you'll see it's really quiet at the moment. So it depends on what happens and when the cash market opens at 8 a.m. If there's a lack of volatility, then I may even consider standing aside. Okay, what else is there to report? The implied volatility is dropping down again, but it's not back down to the June lows yet, but 25.67. So again, not too much on the selling side there, and no news today. This was just yesterday's, where you can see this nonsense and la land continuing as the Non Farm Payrolls there to create 4.8 million jobs. Absurd, as we all know, and as was discovered later on in the adjusted figures. Okay, that will do it for this one, and let's see how things reveal themselves at 8 a.m. As ever, thanks for watching. See you in the next one.